Good morning, good afternoon, and good evening, wherever you are chiming in from around the world. My name is Nathan Ayotte, and I am the creator of the property evaluation tool, also known as PET. Now, before I get started, I'm going to go ahead and give a few tips, as I know you're watching this on a YouTube video. Now, go ahead and just follow my cursor. If you look down here in the lower right, you're going to see a number. If you select that, you're going to have a selection of numbers to choose from. This is actually the quality of the video that you're going to see. I recommend selecting the largest number available. In my case, I have 1080, which is high definition. Now, you're also going to notice a dual arrow here as well. Go ahead and select that, as it will expand the video and compromise the quality very little. Now, you can also select the quad arrow here, which will blow the screen up to full screen. I advise just to go ahead and experiment with that to see if you can see the picture quite well. If not, I would just go back to the expand size. Okay, well, with that said, let's go ahead and jump into the tool. Now, the property evaluation tool, in essence, is an Excel spreadsheet that takes into account every single financial element associated with owning a property. That may be a home, a duplex, threeplex, or fourplex, or another property type. And it accounts for all the financial elements. That may be property insurance, mortgage insurance, property tax, repairs, maintenance. What makes the PET tool very unique, though, is that it actually captures your own tax bracket situation and gives you a very good estimate of the taxes that you're either going to pay to the government at the end of the tax year, or you'll receive a refund in terms of money being paid out to you at the end of the tax year. And the tool is very good at calculating that. So, with that being said, let's go ahead and jump right into this to give you an overview demo of the tool. Now, you're going to notice here several tabs. They're all color-coded down here at the bottom. You're going to see here that we have a tenant-occupied and a tenant tax bracket situation, as well as a owner-occupied and owner tax bracket. The PET tool is also unique in that it captures both the tenant and occupied scenarios. Now, you may ask, well, Nathan, what's the difference between a tenant and owner-occupied situation? If it was a tenant-occupied scenario, in that case, you would try to get all 4 units occupied by tenants. But if it was an owner-occupied scenario, you would intend to live in one of the units yourself, and therefore you would only have 3 units remaining for tenancy. In that case, it would be owner-occupied. Both scenarios are evaluated differently when it comes into taxes and those types of things, but the tool accommodates for both situations, whichever one applies to you. Now let's go to the far left tab over here, which is highlighted in purple, called Instructions. And if we select this, you're going to see here an introduction, which introduces you to the tool, as well as several tips here. And then you're going to see a step-by-step procedure, which is great if you by chance get lost or confused or anything like that. You can always refer to the step-by-step procedure. Even though the tool is quite easy and user-friendly, you can always refer back to this just in case you get lost. Now at this point, let's go ahead and actually run an example through the tool. I'm going to go to the Owner Occupied tab, and this is actually the main interface of the tool. And I'm just going to go ahead and run an example case. And I'm going to go ahead and evaluate a duplex, for example. Now, first thing you should know is you're going to notice there are a number of green highlighted cells. Those cells are only available for user input. So in other words, those are the only ones you as the user are going to be concerned with. You're also going to notice here an Hide Notes box, and it's currently set on yes. If you change this to no, you're going to see here several notes that come up next to each cell. These notes give further clarification and guidance on what should be inputted into those cells. But let's say you just wanted it to look clean and just polish things up again. Just click yes, and all of the notes will disappear. Now you're also going to notice there are little red flags sometimes next in the upper right corner of the cells. If you hover your cursor over those cells, there will be a little box that pops up that will provide further input and instruction or guidance to that particular cell. Now let's go ahead and run our case. We always start in the general information box and we just follow the arrows as we complete the information necessary in the green cells. So like I said, let's go ahead and run a duplex. If you select the type here, you're going to see a variety of different property types. And I'm going to go ahead and run a duplex, which is a property that has 2 units. Now here it says units available for rent. If I'm running an owner-occupied scenario, which means I intend to live in one of the units, then that means I have 1 remaining unit to rent out. So I just leave that as 1. The list price is actually the price of the property that's on the market, whatever the seller is trying to get rid of the property for. Let's just say $150,000. Next is the age. And let's just say it's a 2005 property. It's 2011 as I'm recording this video. So that makes it, let's say, 6 years old. Then the area in square feet. Let's say it's 2,000 square feet. And then you have the lot area, which let's just go ahead and make it 10,000. Now, at this point, we follow the arrow and we go to the mortgage information box and input the green highlighted information here. The MIP is the mortgage insurance premium and is actually set by HUD. There's a little bit of notes on this if you want to pop that up for your own use. But it's actually governed by HUD, which does change every so often. That's why it's highlighted green and you can always input the new percentage. Next is the down payment, which is of course the percentage that you intend to pay in cash of the purchase price. Right now, if you go with an owner-occupied scenario, you may be able to take advantage of an FHA loan, which is a loan geared to first-time buyers plus several other benefits, and they allow you to actually make as low of a down payment as 3.5%. And I'm just going to go ahead and run that as if this was an FHA loan and I can get 3.5% down. Next is the interest, which is the interest on the loan. Right now, currently, and as I record this in October 2011, the rates are very, very good. And I'm just going to go ahead and run actually a pessimistic case and put 5%. Next is the property tax, which I have set here at 1.25%. And then the mortgage insurance, which is also set by HUD and is currently 1.15% for an FHA loan. But you can always, of course, change these whichever situation you're in and whatever governs your case. And then here we have the mortgage payment, which you'll notice is in white, which means we don't actually need to input any information here. It's automatically calculated by the tool, as well as all the cost here as you see in this column. Okay, let's carry on to the next box, which is the costs. Now again, focusing on the green cell, here's the closing cost, which is really the cost of the loan through the bank or lender that you use. Next is the repairs, which is the total amount of repairs or replacements that you need to do upon taking an internal inspection of the property. And also you have the maintenance. Now, I want to jump now and guide you to the repair and maintenance cost tab, which is what you'll always do upon getting to this portion of the tool. It's highlighted in red, and when we click this, It will take us to this screen, which is where a series of boxes are, plus a large table. Now, don't feel overwhelmed with all the information here. Remember, you're only to be focusing on the green cells. Now, first, all we need to do is select which box is for our situation. I'm not dealing with a tenant occupied, I'm dealing with an owner occupied scenario. So let's start with the first green box, which is number of units, which is 2 because it's a duplex. Next is the repair cost. Now, the repair cost, you notice, is highlighted in white, so we don't actually make any inputs in this cell. But rather, this cell is governed by the inputs we make in the item and repair cost box. You'll see here a list of many different items that are often repaired or replaced in a property. All you need to do is simply input how many of those items that need to be replaced or repaired, and it will total up the expenses of those items. I have here termite inspection and property inspection already listed as a 1, and you'll notice my comment that I highly recommend always doing a property and a termite inspection before purchasing a property. It's really just backup for yourself just to cover any unexpected surprises for your property. If you don't want a washer or dryer, you don't have to put 1, but if you already have it, let's say. But let's say I wanted to get a refrigerator, so I'd put a 1 here. Let me go down a little further. Let's say 2 bedroom doors were badly damaged and I wanted to replace those. I'll put a 2 here. And let's say one of the toilets was damaged and I wanted to replace that. I'll put a 1 there. And you'll notice down here, the repair cost cell is updated with the information that I just input. Now we have the maintenance cost, which is very unique to the PET tool that it will actually accommodate a monthly maintenance cost, which is really the money that you should set aside every month to cover replacements and maintenance repairs as they crop up through the ownership of your property. That's what is governed by this large table. But again, only focus on the green cells. Now here is really the only main green cell that you'll input in this entire table. It's the age of the property. Simply put in the age, which in this case we said it was 2005, so it's 6 years old. And this table will actually run based on the age of the maintenance cost for every one of these items. And you're going to notice here many common appliances, bathroom items, gutters and downspouts, heating and air conditioning, plumbing, and the roofing. All you need to do as a user is just select which type you have for your particular property and the age, and the tool will automatically calculate what the maintenance cost will be based upon the estimated life of the items that are in your property. Now I could talk more about this, but I think that gives it a pretty general idea. Now let's go back to the Owner Occupied tab, and you'll notice here that our repairs and maintenance is automatically calculated from our inputs back in the repair and maintenance costs. Now the utility, which of course is simply the gas, electric, maybe garbage collection, various other things that need to be taken care of with your property. And then finally you have the total closing, which is noticed in white, right? So you don't need to make your inputs, it's simply calculated by the inputs we've put in so far. Okay, moving on. Let's go now to the finances box. Here's the purchase price. Now you might ask, well, what's the difference between the list price and the purchase price? Well, again, the list price is the seller's price, what he wants for the property. But you might offer something lower than that. Let's say we're going to offer $140,000, not $150,000. Next is the term, which is the term on the loan that we intend to get for the property. Let's say it's a 30-year loan, and I always recommend getting a fixed loan. Next is the property insurance, which let's say, I'll be really pessimistic in this case, let's say it's $100 a month. You can do much better than that, but let's just say it's $100. Then you have here the price per square foot and the loan amount, which is automatically calculated by the tool. Then we go to the income and growth, which here is the vacancy factor, which is the percent out of the year that your units are vacant. We're just going to go ahead and assume that all the units are occupied throughout the year. In this case, it's the 1 unit. Next is the rent. For this particular duplex, let's say we can get $800 a month. Now here I have a savings, and this is unique because the tool will actually accommodate for your prior living situation. You need to recognize, let's say you were paying, let's just put $900 here. If you were paying $900 for rent on maybe a home or an apartment that you were in before, you need to recognize that you're no longer coughing out that amount of money with nothing more than receipts to show for it. So the tool will actually accommodate for your prior living condition and factor it into the finances and the evaluation. You'll see where this crops up later in the end of this tool. Next is the appreciation percentage, which you can input as either a positive or negative number if we're in a depreciating market. I will have to say though that the tool really runs in a worst case scenario, so the tool does not accommodate actually or factor in the appreciation of the property. So it gives you the baseline, assuming let's say the property never even appreciates, and it gives you a good idea whether the property is going to be poor or not to finance. You will see the appreciation if it were to appreciate that percent each year, and then your equity build up, which is really the principal that you allocate into the process of your loan against the property. Okay, we're done with the income and growth. Let's carry on into the tax advantages. And this is where you're going to see the tool is very good in accurately calculating the tax advantages you'll have with the property. Here's the time, which is really the time throughout the year that you will be paying taxes on it. So let's say you purchased the property in November. Well, you'd only have 2 months of taxes. But if you really want to get a good idea for a whole year, always put 12 in this box. Now we have the tax rate. Now, the tool accommodates for your own tax bracket and accurately calculates what your tax rate is. Simply go down here to the owner tax bracket upon getting to this portion of the tool. As I select this, you're going to see here the 2011 federal tax brackets with each status: single, head of household, married filing jointly, and married filing separately. And all you do is simply input here, of course, in the green cells, what your gross income is, your deductions, and any other additional taxes, which you can simply find on your pay stub. And the tool will calculate what the tax rate is, and simply go to your status, select that percentage, and simply carry it into the tax rate here. It's that easy. Next is the passive loss limit, which I'm not even going to get into exactly what this is, but nonetheless the tool accommodates for that. Then you can see here, of course, all the things that the tool will calculate. The tax benefit percentage, because I'm actually going to be taxed on only 1 unit, right? Because I'm living as a personal residence for 1 unit, but the other one I'm using for business purposes. Depreciation, and I have it broken down in the 1st year as well as the 10th year. And you'll see I have it here, the depreciation of the property is separate from your tax deductions of the property. But you'll see they're all added up here in the maroon colored cells. Here is the average yearly tax deduction, but the total tax deduction is the combination of the depreciation and the tax deduction. Then you see here the taxable income. And you're going to notice here that it's negative because it's in parenthesis. That is simply indicating the money is actually going to be a refund back to you in this case. So we can see here, bottom line, taxes owed is about $2,000 in parenthesis, which again is indicating it's negative. So $2,000 will be paid back to you as a refund at the end of the year. Now, of course, we're going to look at some indicators on investment that are very popular. And this is the ROI, which stands for the return on investment, which is a very good indicator to judge and also compare it to other properties you might be evaluating. And then you have the capitalization rate. And now moving on to the bottom line, which here is highlighted in blue. All these values, of course, are calculated by the tool, so you can simply come down here and see the bottom line finances and evaluation of the property that you are looking at. Here's the gross income, and here is the net income by year and month. You'll notice that it's negative, and in this case, it's saying I'm losing about $500 each month. Now, that is because, of course, I'm renting out only one of the units, and then you have to accommodate the repairs, maintenance, mortgage, and those things supersede my income on the property, which makes sense because I'm only renting out one unit. But when you accommodate for the realized net income, you'll notice this in year and month is actually positive. Now you might ask, well, what is the realized net income? The realized is actually accommodating for this savings amount that I mentioned I was going to refer to again. It's accommodating for your prior living condition because, again, remember, you're not forking out those apartment or rental rates that you have nothing to show for, right? Nothing more than receipts. But the tool will accommodate for that and factor it into your finances, which is great. And then lastly is your break-even time, which here is 24 months or about 2 years, which is the time it will take for you to recoup all of your initial cost in the property. Okay, and that is it. And so that's really the summary of the main bulk of the tool here and how it is used to evaluate a property. I will have to say though, if you look down here, in the lower right, you will find an amortization tab, which simply gives you the breakdown of the loan, which is always nice to see. As well as I have a lenders tab, which is nice because it allows you to compile information on lenders and banks that you are seeking to get a loan from. And it's a good way to just capture the information easily to be able to compare which lender is best and what rates are best. I also have here a template email to simply just copy and paste and send to your bank or lender, providing the information that they need to receive a good faith estimate, which is a good way to populate this information. And it's awesome because at that point, when you start getting banks and lenders to compete, then you will be benefited by getting the best interest rate, which is exactly what you want to do. Okay, well at this point, if you at all are interested in purchasing the tool, as you see the tool is great for evaluating the finances of the property. At the same time, it's also very good to toggle with purchase prices. As you can see that as you put different purchase prices that you might be willing to offer for the property, you can see the changes in the finances, such as the ROI or your realized net income. And it's a quick way to evaluate it only in a couple of minutes. So if you are interested in purchasing the tool, simply do this. Go to a website and open up your URL and go ahead and click www.allpowerseminar.com. Again, that's www.allpowerseminar.com. And when you go to this website, simply go to the upper right and you'll see a tab called Store. If you go there, just scroll down and you'll find the pet logo right here, which is the green gold home. And you can go ahead and actually purchase it simply by putting a 1 in the quantity and adding it to the cart. And then checking out and providing your bill and shipping information, and you'll be all set to go. The tool will actually be sent to you as an attachment within about 1 to 3 days upon purchasing the tool. Okay, well that finishes up this demo. Hope you enjoyed it and hope you received a lot of information about this. And again, if you'd like to purchase the tool, you can go to that website or you can contact me if you have any further questions or comments that you'd like to make. Hope you have an awesome day. Take care.